Hi guys, welcome back to my channel. I'm your host Miss KK and this is The Wave. It is your weekly show that looks at topics related to personal, family and business finances, and our hope is that by the time we get to the end of this series, you'll be better equipped to make sound financial decisions. If you are new here, thank you so much for stopping by. We really love having you on board. Please consider clicking the subscription as well as the bell icon in the comment below so that you can be notified every time we upload a new video. And if you're already a subscriber, thank you so much. Your continued support, interaction and comment in the video below is highly appreciated. Alright, today I'm very excited to start our enlightenment series on the MTC IPO shares, where I'll be sharing some key information that you should be looking out when determining whether to buy the MTC shares or not. And in particular, I'd like to shed some light on the process, as I've been noticing some negative comments being made alongside Facebook posts that are related to IPO, with people claiming that shares are a scam. They bought shares in previous IPO and they're not reaping the benefit that they were expecting. And I don't personally believe that that's necessarily true. I believe sometimes we do things without actually fully understanding what we are signing ourselves up to. And I'm hoping by the end of this series, really, you'll be enlightened to see what exactly you are getting yourselves into, and you will be in a better position to decide whether buying the MTC shares is the best thing you should be doing with your money. Today, I'm going to do a very introduction video where I'll be covering what an IPO is and why would MTC do it. I'm also going to be looking at what shares are and how do shares work in particular, plus what are some of the key features that you need to be watching out for around the prospectus, as well as the requirement that you need to submit in order to be able to participate in this IPO. Then in the next video, I'll be looking at my insight of the prospectus and what I actually think about the certain things that are included in the IPO, which should then hopefully help you make an informed decision as to whether the share is actually a good buy or not. Alright, starting off with IPO, it is an abbreviation that stands for Initial Public Offering. It is a process that a company undertakes to move from a privately held company or a PTY to a public company. So up until the stage, MTC was wholly owned by Namibia Post and Telecommunication Holding, which is called MPTH. And up until this point, they own 100% of the shares. So through this process, MTC is actually, or NPTH is actually giving up 49% of its shareholding to the members of the public, meaning the shares are open to individuals, trusts, corporate, etc., that are eligible to participate in this process. So the issuer of the security, in this case MTC, would then work with a investment house and various banks to facilitate this process. And ultimately, once this process is complete, it essentially means that the shares will be listed on the Namibian Stock Exchange, and everyone that wants to buy and sell shares, they can easily trade their shares. And if shares are listed, it means that information about the share price and about the performance of the company is publicly available. So if you want to see at any point in time how much your share is worth, you can go on the Namibian Stock Exchange and find out how much that is. Previously, if you wanted to see how much profit or how much MTC has declared as dividend, you weren't able to find that information easily, as it was a privately held company. So why would MTC do this? So a listing is mainly a form of financing. So a company generally has two broad ways that it can find financing. It can either do it through debt financing or equity financing. So debt financing typically involved a company going to a banking institution or any other similar institution. Then they get what is called a loan, and that loan is repayable over a fixed period of time, and a company will be paying back in installment or a lump sum at the end of the loan term, and the bank would generally, or the lending institution would generally charge that company interest. So that is what is called debt. On the other hand, you could also get equity financing. Equity financing is actually a company raise funds in exchange of giving the shareholders. So if you buy shares in a company, you would now be called a shareholder. That's why MTC is advertising it, saying, come move from a hairdresser to a shareholder, or from a farmer to a shareholder, because once you have shares in a company, you are known as what is called a shareholder. So if a company gives up its shares in exchange for financing, they are able to use that money to facilitate their growth expansion expansion. So MTC is using this as a means of raising financing. Equity shares tend to be slightly cheaper than debt because equity, number one, is not repayable. So MTC is not obliged to pay back your money if you buy shares in them. It simply means that if you do want to exit, if you no longer want to be part of MTC shareholding system, you need to sell your shares to someone else that is willing to buy. Unlike debt that attracts interest, shares actually pay the shareholder what is called a dividend, and a company is not obliged to pay a dividend, unlike interest where a company is obliged to pay interest. So practically MTC is actually using this process to raise funding, and that funding they will use it to expand their growth strategy, which is clearly outlined in the prospectus. So that's what I wanted to highlight with regards to an IPO. So let's move on to shares. Shares are really just a unit of account that enables the shareholder to own a percentage of ownership in the company. So if you have a shares, the number of shares that you have would give you a relative proportion of a similar shareholding into that company. So just like debt, shares are also classified in different class of shares. You can have ordinary shares or you can have preference shares. The difference between ordinary shares and preference shares really is dependent on the rights that's attached to it. Preference shares by nature of it means that you have a preferential treatment to ordinary shares. So if the company were to declare dividend, they will first pay out and they will first pay the preferential shareholders, and then they will pay ordinary shareholders. But in this case, MTC is actually just issuing ordinary shares. So that means everyone that has shares will have equal rights. So ordinary shares will also enable you to have voting rights. So meaning if you are a shareholder, you will be, invited to a company's general annual meeting, and you participate in decisions that will influence the activities of the company. The other thing that I wanted to highlight with regards to a public company is there's generally what is called a divorce between ownership and control. The shareholders are the owners of the company. The board of directors, the shareholders appoint board of directors, and the board of directors actually run the day-to-day operations of the company, and they do that through appointing managers and day-to-day employees. So if you are the shareholder, in as much as you own the shares of the company, you are not generally the person that tend to make the call of what must happen on a day-to-day basis. That is done through a board of directors, but ultimately you still have an influence on who becomes a director in that board, depending on how much voting rights that you have. So that's one thing that I wanted us to highlight today. So that's all I wanted to highlight about what an IPO is and what shares are, and why would MTC do an IPO. And I also then wanted to highlight some of the key features in the prospectus. So the application to buy shares opened the 20th of September. It's going to run until the 1st of November, and listing is expected to take place around about the 16th of November. So for you to be eligible to buy shares in MTC, you need to have enough money to buy at least 200 shares. So a share is being traded at $8.50, and at 200 shares, that will give you around about 1,700 in order for you to be eligible to buy the shares. That's how much you need to buy the shares. With regards to the process to actually participate into the shares, is very simple. If you go to their website, there's a step-by-step process that you need to follow in order for you to be able to, apply for the shares. But it really just entails in you filling in the application form, and then you providing the necessary document. I'm just going to read the required document on this prospectus, on this reflect that I got. MTC also has like a one-pager reflect that they have at their offices and selected retailers, where they are giving out information on various things that you need. And one of the things that you need is if you complete an application form, you need an original certified copy of your ID, because that will prove identity and citizenship, and your details per your ID is going to be entered on the share certificate. That will ultimately be proof that you are a shareholder in MTC. Then you need a confirmation of banking details. Ultimately, this is where, should the company pay out dividend, they will be paying that money into this account. Then you need a proof of country of residence, and here it's normally proof of residence in terms of a municipality bill, a mortgage contract, or a rental contract, and they are saying that this should not be older than 3 months, and lastly, proof of payment that you've actually made the payment. So basically, really, that's all you need. Very simple. You fill in an application form, you attach all this information that is required, all this document that is required, and then at the end of the day, you get your share certificate that is a proof that you are now a shareholder in MTC. So there's a lot of excitement around these shares. Everyone seems to be keen to buy the shares. So generally in an IPO, you run the risk of being an oversubscription, i.e. a lot of people want the shares and there's not enough shares. So if something like that were to happen, MTC has actually outlined that they will give preferential treatment to, Namibians, its customers, and then, everyone else will follow. So do not be, scared. I believe there's enough shares for everyone, but in an event that there is a lot of people buying the shares and more than what MTC can actually offer, then they will give it in order of that hierarchy. The other thing is also if there's an undersubscription. An undersubscription means that MTC is wanting to sell 150 shares and only 10 people or 40 people actually pitch up. So that means they actually aren't able to meet their target. So in an event like that, a company would actually have what is called an underwriter. An underwriter would actually charge a company a fee to guarantee that should there be an undersubscription, they will buy all the shares that are not taken up by the general public. This is to just guarantee the issue of the security that should the general public not react to the offer as they were anticipating, there's a backup plan for this underwriter to actually buy the shares and for MTC to actually raise enough funding that they want. The reason why they do this is because listing is very expensive and it involves a lot of exercise. So to actually go through all this process, spend all this money in terms of technical expertise for people that put together the prospectus, the various employees that were involved in the listing process, and to actually get to the end of the period and then you decide you can't list because you don't have enough subscriber, it's actually a costly exercise. Therefore, the underwriter is there to make sure that a company is guaranteed that all this costs that are incurred won't go to waste. So really, that's all I wanted to highlight in this process. I hope you understand now what the process entails, what an IPO is, why a company would do an IPO, what shares are, and how shares work, what documents you need to be able to subscribe to the shares, the number of minimum shares that you need to buy, what will happen if there's an oversubscription, as well as what would happen if there's an undersubscription. So in the next episode, I'm going to actually be looking at the gist of the prospectus, what you need to be looking at in deciding whether this share is actually a good buy. So the share is currently being offered at $8.50. So the question that we are trying to ask here, is this a good buy? Do we really think MTC is worth $8.50 per share? Or should it actually be $12 and we actually think we are scoring buying the share at $8? Or is it a situation where we are saying, actually, I'm only prepared to pay $6 instead of $8 and I'm waiting for MTC to list and the share price will drop and then I'll buy the share when the share price drops? Those are the sort of questions that we're trying to interrogate, and I hope by the time of this conversation we'll have some answers to those questions. Thank you so much for stopping by. We really love having you on board. Like I've mentioned, please don't forget to subscribe, and also don't forget to share the videos with your friends and families that are also looking to participate in the offer. I am super excited to be part of this enlightenment series. Until next time, it is goodbye.